What is going on, investors? Back again to take a look at AT&T by request. Thank you everybody that watched my last video on AT&T and left me a comment to keep you updated on what the company is doing. And so they just reported earnings. As you can see, I'm recording this during market hours, so this price will flop around a little bit here. Full disclosure before we get into things here, I do own AT&T shares, but that will not affect how I review the company on today's video. Now, what we talked about on our last video broadly is this stock chart. Notice that this stock loves to come down to this $20, $23 level, $24 level per share, but it really hasn't broken below $20 since like the 90s. Some of you might not even been born in the 90s. So that to me just shows you there's tremendous amount of support for this stock when it gets down to these levels, probably a little bit lower where it's at today. The reason because is this stock pays a very, very healthy dividend. We're at 6.88% right now, according to Yahoo. If this stock trades down into that $24, $25 range, this will go up to 7, 8% yield. And if you look at a savings account or a treasury, 7, 8% yield is very, very extremely attractive at today's rates. And so this stock starts attracting dividend and income investors. Now, there's a little bit of upside, but I don't want you to be fooled that you're going to buy AT&T and it's going to rush back up to a $38, $40 stock price. That's, maybe it's possible. As we saw here, it made quite a move back in 07, but that was a long time ago. And we see it did make another high back in 16, and then maybe even a little bit more recent time back last year up at this $38 level. So there's some upside in these shares, but this stock is likely to trade in a range down to call it 25 and up to say about 35. And so that's just something that you want to keep in mind with AT&T. This is not Tesla. This is not Beyond Meat, as I'm sure most of you know. But what the biggest difference is you're getting paid 7% yield, which is a $2 a share dividend. Then that's a really, really nice thing to have in your portfolio. Let's take a look at the most recent results. Like I said, they just reported earnings here, and they just did it for the second quarter, this June quarter here. What I like about AT&T is they give you a very broad view in their financials. So we have operating revenues here, and they go all the way back to 18, and they give you kind of a quarter by quarter view here over the last few years. And as you can see, these operating revenues, very steady. We're at the 41 billion mark, and it really hasn't been that low since 2018, but we're in some, unique times right now. And so I think most investors are giving companies the benefit of doubt. And while AT&T shares are trading off a little bit today, I think the broader market is trading off a little bit. And I think that's something that you can keep in mind as we move through this. The communication segment, a segment that most of us know is kind of cell phone and other kind of things. So you've got mobility here. Again, a very consistent business line, trading between 17 and $18 billion of revenue. And we hit it again for the quarter. Entertainment group, a little bit smaller unit, but, again, really consistent between 10 and $11 billion. And then finally, you have business wireline down here, right in that $6 billion range. This is an interesting segment. You got a lot of businesses that are under pressure and going out of business. It's interesting that this number, while it did drop a little bit in comparison to some previous years, quarter over quarter, it's actually holding steady. So that might give you a little bit of confidence that the business wire segment might hold up, even though a lot of businesses are being impacted. Now, Warner Media is a much newer part of the business. They acquired this for lots of money and paid lots of debt for this type of company. And so you've got Turner Broadcasting, which I think is the Turner networks, and also like CNN and things like that. You've got HBO, which most people know, and you also have Warner Brothers. And now you take a look at Warner Brothers, that went down in comparison to some of these, and that's because they're a movie maker and there's not a lot of movies right now. And so this is a segment I'm actually impressed that it held up as well as it did. Home box office, HBO, it's interesting. Quarter over quarter, it actually looks pretty nice. Had a nice pop here, but in general, home box office has been trading in this range for a pretty long period of time. You'd like to see these numbers start trending up. I know they've got a new app and things like that with home box office. As an AT&T investor, here's where your upside, I believe. Cell phone market's pretty well penetrated. You got Verizon and T-Mobile and other companies out there providing that. But this Warner Media, you got Netflix with a huge valuation. You've got other companies like Disney out there. This is where the growth can be. I'm just not really seeing it here. Take a look at Turner. We're seeing a drop quarter over quarter, and this 2.988 billion is as low as we've seen it back here, back in this time frame. So Warner Media is not really growing, and so to me that's a little bit worrisome as a shareholder. I think they paid a lot of money for this and brought a lot of debt onto the company's balance sheet, so you'd really like to see this start contributing, but so far it's not. Now finally, if you watched my last video, the other, outside of operating income and things like that, I think what you want to take a look at when you look at AT&T is cash flows, because this is a company with lots of debt and actually lots of cash running through the business. So you just want to make sure cash flows are maintaining their level, especially where we're at now. So we have the previous period here, and then we have the current period, and then we go back a year here. We see we have $12 billion of cash by operating activities here, and so that's actually good, because if you compare it to the previous period, it's up considerably from 8 billion, and it's actually up from the previous periods. Now, we're not as good as we were a year ago, but a lot has changed in the world too. So, and like I said, certain segments of their business are being impacted more than others. I like that we're seeing this quarter over quarter growth in cash flow for AT&T. They need to keep this, not necessarily growing, but it needs to stay at this level. Otherwise, AT&T could be I wouldn't say in trouble, but as we move down here, let's take a look at financing activities. You notice here that they're issuing debt here, and then they're paying some off, and then they're issuing more long-term debt here, and then they pay some off. So they're kind of like, I guess the saying is robbing Peter to pay Paul, but in the business world, taking on debt like this is not necessarily a bad thing. Here's the thing you want to really pay attention for, is because you are buying this stock for this $2 dividend. So here's dividends paid right here on the cash flow, and we see here it's at $3.7 billion for the period. Again, they had operating cash flow here of 12 billion. In terms of investing, they invested 5.2 billion, and then if you take into account all their financing, so the debt that they repaid, the debt that they issued, they actually came out positive 188 million. So you gotta hand it to the CFO of AT&T. This guy is really managing this pretty well in today's environment, because you can see a lot of cash flowed out of the business when it came to the financing activities, because they have so much debt. But because rates are low and the bond market is open and the Fed is just pumping money into companies like AT&T, they're able to borrow money at really low rates, refinance and stretch the terms on this debt. And so it's buying this company time to keep generating cash flows month over month, quarter over quarter, and so they're able to pay down that debt. So I don't mind what I see here. We see cash and cash equivalents here. We see this is actually ticking up, and so wow, it really ticked up in the quarter. So this is a company where you gotta, if I could do a standing ovation right now for the CFO, the Chief Financial Officer of AT&T, he's actually doing a pretty good job right here, at least from what I see on the cash flow statement, because they are managing this debt well. They have plenty of cash to cover this dividend, which is exactly why you're buying the shares. But again, this is not a company like Beyond Meat or a Peloton or a Tesla that you're expecting to double or triple your money in a few weeks or months or even years. This is a long-term hold, or at least if you want to park some money and earn a little bit of yield over and above a treasury or savings account. Obviously, AT&T is providing that with a $2 per share dividend. So there we go. AT&T, still liking what I'm seeing. I'm not in love. I'm not running out and just buying as much AT&T shares as I possibly can. But a stock like this does have a place in your portfolio. If you want to be extra safe, I would set a stop loss on this probably at around that $20 level. If for whatever reason this stock breaks $20, something really bad has happened and I probably would want to be going to cash. And so, but we see the stock has held this level for basically 20 years now. And I think you can anticipate that going forward, especially where interest rates are. So there we go, AT&T. Hopefully you guys enjoyed that. We'll be back again very soon. Hit that subscribe button and maybe that like button as well. Love all the comments that I'm getting. Thank you for watching. Good luck with your investments.